Hi, everyone. On behalf of the Office of Recovery, my name is Micah Joslow, and I'm excited to welcome you all to today's session on the Restaurant Revitalization Fund. The American Rescue Plan Act established the Restaurant Revitalization Fund, or RRF, through the Small Business Administration to provide funding to help restaurants and other eligible businesses keep their doors open. Our goal today is to help you all apply to the RRF to ensure you all receive the funding that you deserve. We have three key objectives for today's session. First off, we're going to start by describing the SBA Restaurant Revitalization Fund to give you a sense of what the fund is, what the fund can be used for, and how you can apply. Next, we're going to define some next steps to help you prepare for the application process, given that the application opened on Monday. And finally, we're going to clarify some additional support that will be available through both the Kansas Office of Recovery and the Small Business Administration. Before we begin, I'm really excited to introduce you all to our co-hosts from the Kansas Departments of Agriculture and Commerce, as well as the SBA. I'm going to begin with our Kansas State Secretary of Agriculture, Mike Beam. Mike Beam was appointed Secretary of the Kansas Department of Agriculture by Governor Laura Kelly in January 2019. Secretary Beam came to KDA following 38 years of experience in association management for the Kansas Livestock Association. He also served as the executive director of the Rancho Trust of Kansas, an affiliate of KLA, for 15 years. He has dedicated his career to assisting farmers and ranchers to advance their policy and public relations needs and in building highly visible, responsive, and respected organizations. In his role at KLA, he participated and led coalitions in strategizing and implementing legislative and regulatory initiatives. Secretary Beam, thank you for being here today.
Well, thank you. Congratulations for putting this together. I appreciate all who have worked on this to get this information out. When you read a few pieces of my bio, you probably realize or don't realize that at the Kansas Department of Agriculture, we deal daily and directly with the restaurant and hospitality industry through our food safety and lodging program. So it's only, I think, fitting that we lend at least some support and encouragement with this program, and we'll be glad to help however we can through its rollout. But congratulations to those putting this together, and I look forward to learning more about the program. Thank you.
Thank you so much for being here with us today, Secretary Beam. Next, we're going to hear from Ryan Wills, who is the Hospitality Industry Liaison for the Kansas Department of Commerce.
Hi, everybody. Very happy to be here today and represent the Department of Commerce, showing our support for the Restaurant Revitalization Fund. It's worth noting this particular industry is near and dear to my heart. Before this position, I was a general manager at a boutique restaurant here in town that's no longer open. So I know firsthand the excitement and energy that goes into running a restaurant, as well as the sacrifices and hardships that also exist. And I feel like the fact that these funds were created really shows two things. It shows the recognition that the restaurant and food service industry needs financial support right now. And all of you have been hit especially hard over the last year and continue to face significant challenges. I also think it shows how much we as a people need restaurants from both a human perspective as well as an economic perspective. The restaurant industry is massive and essential to our overall economic health. As Secretary Beam pointed out, nothing operates in a vacuum. All these industries are connected to one another. So we need to do everything we can to show support for it. But also something less tangible, but not less important, is the restaurant and food service industry really creates an atmosphere of community, engagement, and human connection, things that are essential to who we are as people, and I think something we need now more. So very happy to be here to show support. Please participate in this grant. Please don't be intimidated by it. And that's why we're doing webinars such as these to show that there are resources and people out there that want to help you succeed however you can. So thank you for everything you do, and looking forward to ideally a brighter future here. Glad to be here today.
Thank you so much for those words, Ryan. We truly appreciate you being here with us today. And finally, I'm now going to hand it over to our co-hosts for today, who will be leading us through the content portion of our session. These are our district directors for the state of Kansas, Wayne Bell, who represents the Wichita District Office, as well as Michael Barrera, who represents the Kansas City District Office, covering the eastern portion of the state. Thank you so much for being here with us today, Wayne and Michael.
Thank you. Thank you, Micah. As you noted, I'm Wayne Bell, the district director with the U.S. Small Business Administration in the Wichita District Office. From the Wichita office, we cover everything west of Topeka. So more or less 2/3 of the state falls under the Wichita District territory. And then my colleague and friend, Michael Barrera, is the district director for the Kansas City District Office, which covers the eastern part of the state. I'll pause here so that Michael can say hello, and then I'll come back to a few remarks and we'll get started.
Thank you, Wayne. Good afternoon, everyone. I'm so happy to be here to present this information for all those restaurants in Kansas, whether it be Eastern Kansas, Western Kansas, Northern or Southern Kansas. It's such a great program that we hope will help revitalize those small towns and big cities around the state. And we are working in cooperation with our friends in Wichita, because we believe it's so important for both of us to get this information to you. And I'm also appreciative of having the Secretary of Agriculture here, the Department of Commerce here, and all of you that are here today. Thank you, and I look forward to the presentation. Back to you, Wayne.
All right, thank you, Michael. And as you all can see, I'm getting a little nice Kansas sunlight as we're getting started here, but you know, it's all good. I want to thank the Kansas Office of Recovery for coordinating this. They're our host today, as well as the Kansas Department of Commerce and certainly the Kansas Department of Agriculture. And nice to meet Secretary Beam. So without further ado, and I know, you know, all of you all here today are really looking forward to learning a little more. Maybe perhaps you have specific questions that pertain to your restaurant or your company before you move forward with your application. And before I proceed any further, I'm hearing a little bit of background. So Micah, I'm going to ask if we could ask everyone to mute their lines. And certainly if you have a question, we welcome those questions in the chat. And then later in the presentation, we'll have an opportunity to answer questions through a Q&A. And I believe the presentation content should be probably about 30 minutes in total, and then we'll have plenty of time for questions. So Micah, are we good to go? Can you hear me just fine?
Yes, we are all set, Wayne. Thank you so much.
All right, thank you so much. Well, let's get into the presentation, and we'll proceed from here. All right, so the Restaurant Revitalization Fund, as you all probably know by now, the American Rescue Plan Act became law on March 11th of 2021, and that established the RRF. Essentially, it appropriated $28.6 billion for the RRF, authorizing the SBA to award funds. The appropriations will remain available until those funds are exhausted. And by the way, we're anticipating, just by the response, we're anticipating, you know, that with this demand being very high, we do anticipate those funds to be exhausted, and perhaps as early as maybe, you know, 3 to 4 months from now. Funding must be used, or the funds must be used for eligible expenses no later than March 11th of 2023. So that's a date I'd like everyone to keep in mind. All right, who's eligible, you know, for this award? Really, by its title, obviously restaurants, and by the way, for-profit entities. So restaurants, food stands, food trucks, food carts, caterers, bars, salons, lounges, taverns, snack and non-alcoholic beverage bars. As you all see there on the screen, it's a pretty broad representation. It's essentially, you could sum it up by all food and beverage entities, and even those entities that perhaps may be within a larger business model. So I'll use as an example a bakery that may be housed within a larger grocery store. If that bakery accounts for 33% of the total revenues, that bakery would be eligible. And we'll come back to a few other examples there, but you guys see the full list here. Again, wineries, coffee shops, distilleries, and so the list again is pretty broad. And entities are ineligible if any of these apply. So if the entity or the business is a state or local government operated business, it would be ineligible. And then also, here's something that's really important to note. As of March 13th, 2020, you could not operate more than 20 locations. And so the business entity applicant, and that's important to, just kind of, let's use that language. The business entity applicant could not operate more than 20 locations. 20 is the maximum, and that's actually the size standard for this program. Typically under SBA programming, our size standards are determined obviously by revenues or by the number of employees. For this particular program, the size is limited to 20 locations or less, all right? And so the business entity applicant could not own more than 20 locations. And we'll come back to that as well. I'm sorry. Micah's playing, he's throwing curveballs at me here. All right, so if we could go back to the previous slide, there are a few points I just want to make sure we cover. You can't have a pending application for the shuttered venue operators grant, or you cannot have received a shuttered venue operators grant. So these two programs conflict. It can't be a publicly traded company, and your restaurant or your food company cannot be permanently closed. It could be that you had to close temporarily. That's not a problem, but there needs to be a plan, and there needs to be eventually a resumption of operation. And so also you can't be a nonprofit organization. And if your funding amount or grant amount after the calculations arrive below $1,000, then you're not going to be eligible. $1,000 is the minimum amount of these awards. All right, and so how much may you all receive? Well, the maximum for any location, if you're a franchisee and you own multiple locations, the maximum for any location is $5 million. The maximum for any eligible, again, business entity applicant is $10 million. So $10 million would be the max, $5 million for each location. And again, the minimum award is $1,000. Okay, how is this program different from other programs? Well, one thing that's neat about this, you may or may not have heard of this of SAM.gov, which that is the System for Awards Management. And typically with any of our grant programs, and perhaps in the government contracting realm, there may be some of the food service companies on the line today that also participate in government contracting. That's where that comes into play, SAM.gov. For this program, it's not a requirement, and so you do not have to worry about registering in SAM. Nor do you have to have a DUNS number or a cage identifier. Those are identifiers on our other programming. Those things have come into play, but for the Restaurant Revitalization Fund, that's not being required. However, you do have to have a valid tax ID number or an I-10 number. That would be required, or that would be acceptable if it's not expired. And I say that, but you could have in some cases, and I'm thinking of tribal entities, they're allowing the social security numbers to be used in place of the tax ID numbers. And so again, just to summarize, an individual taxpayer identification number from the IRS, that's required. And ITIN, if you have any questions about ITIN expirations and so forth, you can find more information at irs.gov. All right. In terms of your legal structure, really all of the practical legal structures are just fine. You could be a C Corp, an S Corp, partnership, a limited liability company, a sole proprietor, self-employed individuals, independent contractors, and again, tribal businesses. And I'll pause there because tribal businesses, their tax ID number that's going to be allowed, again, is going to be the social security numbers. By the way, an LLC taxed as an S Corp or sole proprietor, all of these types of entities are eligible. All right, in terms of franchises, franchises in general and broadly, franchises are eligible. So as a franchisee with multiple locations, you would be eligible. But remember, the franchisee or the applicant business, the applicant business is limited to 20 locations or less. So that's, again, very important to note for this particular program, 20 locations or less, that's the size standard. So the applicant business and its affiliates could not exceed that number. And by the way, SBA has its own franchise directory. These are approved franchises that have already been vetted by the SBA. We have a host of franchises that are on the directory. You can visit our website to determine, if you haven't already, to determine if your franchise is actually one that's already been approved by SBA. And if it's not on the SBA franchise directory, then basically SBA would not automatically just rule it out, but there would be that vetting of the parent and the franchise agreement. The idea behind that process is SBA wants to make sure that as the smaller business, you're not being controlled totally by this larger entity. And so that's the reason SBA reviews these franchise agreements and then places them on those that are approved on our SBA franchise directory. All right, in terms of bankruptcy, if you've filed bankruptcy and you have an approved reorganization plan, then that would be acceptable. However, if you filed Chapter 7 liquidation bankruptcy, that would not be, that would deem you as an applicant ineligible. If again, your operation is permanently closed, and so again, if you're permanently closed, that would deem your business ineligible. But again, if you have an approved reorganization plan, then you would be eligible. So if you're in the process of filing for bankruptcy, you would not be eligible until you get an approved reorganization plan in place. All right, and so how do the other programs, impact your award within the Restaurant Revitalization Fund? If you've already received the Paycheck Protection Program loan, then that is going to be deducted from the amount of the award that you're eligible for. A problem comes up if you're in the process of applying for the Paycheck Protection Program, because actually there's a section in the application for the Restaurant Revitalization Fund where you'll actually have to attest that you hadn't received or you're not getting a paycheck protection loan. And so the guidance here would be, if you have applied for PPP, you need to wait until those funds are awarded before you apply for the Restaurant Revitalization Fund, because again, the PPP monies have to be deducted from ultimately, the amount that you're going to be awarded. And also, as an applicant, you must not have a pending application, or you may not have received a shuttered venue operators grant. Remember, that program conflicts with this program. So you can't have applied for shuttered venue and you can't have received shuttered venue. Must not have and I'll clarify that. You must not have a pending application for shuttered venue, nor have received a shuttered venue operator's grant. And all applicants must certify that the current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. In short, you've got to affirm that you need these funds due to economic uncertainty. All right, eligible expenses. Really, all of your normal business operating expenses, all of those things are really, or the majority of those expenses are going to be allowable. So we're talking about payroll costs, business utility payments, business maintenance expenses, business supplies, that could be personal protective equipment, cleaning materials, other inventory, business food and beverage expenses, including raw material, covered supplier cost. If you're using other suppliers, perhaps to come in and to clean your facility or something like that, those supplier costs would be acceptable. And then business operating expenses, which might include insurance, marketing, and other fees, other legal fees, and even point of sale equipment, et cetera. Those things would be acceptable. In terms of construction expenses, it's important to note that construction of outdoor seating would be permissible. That would be acceptable. But expansion costs are ineligible. And that expansion also includes, if you've expanded inside of a building, if you've expanded it somehow, that would not be eligible. However, if you've had to modify your space to account for a local requirement, a local government requirement to allow customers in, then that type of modification would be allowable under maintenance expenses. All right. But it's really important to note these funds cannot be used to expand to a new location, that sort of thing, or to buy an additional location, that sort of thing. These funds cannot be used for that. Could be used for payments on any business debt, such as a mortgage obligation, both principal and interest. It does not include prepayment of principal and interest moving forward, but certainly if you've gotten behind on any business credit, any mortgage or lease payments, if you've gotten behind, these funds can be used to get caught up. And then again, moving forward, business debt, both principal and interest, making those current payments, that certainly is acceptable here. All right, and when do you have to use the funds? And so the funds must be spent on expenses that were or are incurred between February 15th of 2020 and March 11th of 2023. So February 15th, 2020, all the way out to March 11th of 2023. If the business permanently closes after receiving the funds, then the covered period will end when the business permanently closes, or on March 11th of 2023, whichever occurs sooner. And then any funds not spent on eligible expenses by the time the covered period ends must be returned to the government. All right, and so again, more of when you have to use the funds. So again, after the total awarded funds have been exhausted, entities must provide a detailed expenditure report and certification for the required period. And then also on an annual basis in December, the business entity, you're going to provide a self-reported, unaudited, detailing use. Basically, you're going to specify how you use the funds, and that's going to be required each December, and that's going to be an annual requirement until this program ends. And SBA is going to provide additional guidance that's going to outline the reporting that's going to be required annually. All right, and so just to give you an example, and this is probably the easiest calculation, and then I'm going to hand it off to Michael Barrera to continue the presentation. So let's assume in this example here, for the first calculation, for those business owners, those restaurant owners and food service entities that were in operation in 2019, basically you would take your total revenues for 2019, you're going to subtract your gross receipts for 2020, and then you would also subtract any PPP loan amounts, and whatever's left, that essentially is going to be your award amount. So in that example, if we were looking at a business that had 500,000 in gross receipts for 2019, maybe they had 200,000 in 2020 as their gross receipts, you would simply subtract the 200,000 from the 500,000. And then if they received any additional PPP funding, you would subtract that PPP funding, and then whatever would be left, that would be the award amount in this first example. So Michael, I'll hand it off to you, and I'll pause. I'll look at the chat to see if there are other questions there as well. Michael, you're muted right now.
Okay. Can you guys hear me okay? Okay. Hello, everyone, and thank you, Wayne, for doing that. I guess we'll go to the next calculation. And I'm so glad Wayne gave me the hard math, but we'll get through this. I'm a K-State grad, so I'm going to know I'm a Kansas guy. So I'm so glad to be back here. Also, I have a lot of experience in the restaurant industry. Both my parents have owned a couple of restaurants. Grandparents have owned restaurants. I've got cousins that own restaurants. So this is a program that's very near and dear to my heart about how the restaurants are working. I'm so glad we can do this information today. So for calculation number 2, those applicants that began operations partially through 2019, they're going to use this calculation. You'll take their average 2019 monthly gross receipts times 12. And then you will take that number and minus your 2020 gross receipts. Then you minus your PPP loan amount. Now, those applicants that began operations partially in 2019 have 2 options. You can use the calculation 2, which is what we're going over now, or you can use calculation 3, which I'm going to explain next. However, calculation number 3 could require longer processing times. So next one. Here we go. Back one more. There we go. Got to go back to calculation number 3, Micah. Okay, calculation number 3. Now this is for those applicants that began operations on or before January 1st, 2020 and March 10th, 2021. And those applicants who had not yet opened but have incurred eligible expenses as of March 11th, 2021. Now what you do on this one, you'll take the total amount spent on the eligible expenses between February 15th, 2020 and March 11th, 2021. Then you will minus your 2020 and 2021 gross receipts, then minus the PPP loan amount. Now, applicants that began operations partially in 2019, again, may choose to use calculation 2 or this calculation number 3. However, calculation 3 may require longer processing time because we'll have to verify all the gross receipts and expenses. Next one. Okay. What do you need to exclude from your 2020 gross receipts? Well, first we talked about the payroll protection program. You're going to be deducting that You you will need to exclude that from the 2020 gross receipts. And gross receipts is basically any receipts that you got during the year, not just revenue, but any receipts you may have gotten. You'll exclude 2020 and 21 PPP loan or second draw PPP loan amounts. You'll also exclude any SBA Section 1112 payments. You'll also exclude idle loans, whether that be your regular disaster idle loan, idle advance, idle targeted, idle advance, or any other grant funds received via the CARES Act. You'll need to exclude any state and local business grants. So if you receive some grants from the state of Kansas, you'll need to exclude, or your particular city, you'll need to exclude those monies, those receipts from your 2020 gross receipts. You'll also need to exclude any Randolph-Shepard Act financial relief and restoration payments, appropriation. If that's something you haven't, if you don't know what that is, you don't worry about it. But if you've gotten that, you'll know what it is, you'll need to exclude that. Okay? How do you apply? You're going to be applying through the SBA platform at restaurants.sba.gov. Repeat it, restaurants.sba.gov. There's also one in Spanish, restaurantes.sba.gov. There's also a point of sale vendor. And these are folks like Aloha, Square, and those particular things, you can apply through them. And the SBA is actively looking to partner with more point of sale vendors such as those. You can also call on the telephone. And remember this number. This number is going to be important, not just for applying, but for questions that you may have. That number is 844-279-8898. And I'll repeat it. Again, you can apply through a telephone, 844-279-8898. But you have to consider, make a business decision on this. A telephonic application is going to have a longer processing time. What's going to happen? You'll call someone and they're going to mail you the application. And that's going to, and the way the post office is working, it's going to take some time. And then you can probably upload it or mail it back. That's all going to take time. And while you're doing that, others are applying through either the website or through the point of sale vendor. So they're getting their applications in. So that's a business decision you'll have to make. So consider that if you want to apply via telephone. We're not saying not to, but just consider that option. Okay. Now, what are you going to need in order to apply? You're going to need some documents. The application, which is SBA Form 4172, must be completed, initialed, and signed. Completion of this form digitally on the SBA grant platform will satisfy this requirement. So if you go to the restaurants.sba.gov, you can obtain the form from there, complete it, initial, and sign it on that particular platform. You're going to need verification of tax information. And that's IRS Form 4506, which will be completed and signed by the applicant. Completion of this form digitally on the SBA grant platform will satisfy this requirement. Basically, this allows us to contact the IRS and request your tax. Gross receipts documentation. Any of the following documents demonstrating gross receipts and, if applicable, eligible expenses. We'll need your business tax returns, IRS Form 1120 or IRS Form 1120-S. We'll need an IRS Form 1040 Schedule C, IRS Form 1040 Schedule F, or for partnership, we'll need a partnership IRS Form 1065, including the K1s. We're going to need some bank statements, and basically we're going to need the 3 bank statements from the 3 months prior to you applying. So if you apply in May, we'll need your April, your March, and your February bank statements. We can also use your externally or internally prepared financial statements, such as income statements or profit and loss statements. Also, the point of sale report, including IRS Form 1099-K. Okay, that's all. Okay, this is what we need for different calculations. For calculation number 1 and 2, required, we'll need the SBA Form 3172, which is the application. We'll need the tax verification form, which is IRS Form 4506-T. We'll need your 2019 gross receipt for your tax returns. 3 months of bank statements, 2020 gross receipts. So we'll need at least one of the following. The preferred is your federal tax returns that are filed, or a point of sale report, which we will accept externally or internally prepared financial statements as an income statement, or P&L statements that are signed, dated, and certified as to their accuracy by the applicant. But as stated, that may take a little longer because they'll have to physically look at those reports and verify. That may take the review past 14 days. Okay. For calculation number 3, required. Again, the application, which is SBA Form 3172, your tax verification, IRS Form 4506-T, and these are 3 months of bank statement. That's including the support account linkage validation. Now this, some folks have got a little confused on this. What that is that we're going to require a way to link to your bank account for 2 reasons. One, to be able to find out what you have in there, make sure that you can make sure that you're a legitimate business, and so we can deposit monies into that account. And some folks have been, one of the questions they're going to ask is probably for your password and your ID. And that is going to make some people nervous. So you'll have the option of providing that information, or you can actually physically upload your bank account information. You have one of those 2 options. Now you also need to have your 2020 and 2021 gross receipts, for at least 1 for each year. Preferred, you need your 2020 federal tax returns that are filed, or your 2020 federal tax returns, prepared but not yet filed. You'll need your 2020 point of sale reports and your 2021 point of sale reports. Eligible expense documentation, at least 1, and required corporate supporting documentation for a specific eligible expense type, preferred, and then a CPA comfort letter with accompanying P&L and balance sheet documentation that will provide the fastest SBA review. That SBA comfort letter, and you can talk to an SBA, they'll tell you what that is, basically them certifying that what the P&L and balance statement said. The third-party verification, which makes things go faster. This will accept it again, but it may delay it past 14 days. An externally or internally prepared financial statement, such as an income statement or P&L statement, that's signed, dated, and certified. And eligible expense documentation as well, like invoices and receipts. Next one. This is for the brew pubs. In addition to documentation of the prior slide, those applicants that brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, and bakery, we're going to need documents that evidence that on-site sales to the public comprised at least 33% of gross receipts for 2019, which may include tax and trade bureau forms, state or local forms that are filed, or internally created reports and inventory management sales reporting for accounting software, like Quicken. For businesses that opened in 2020, the applicant's original business model, that's when we say applicant's original business model, that's basically your operating plan. It should have contemplated at least 33% of gross receipts in on-site sales to the public. For applicants that are in, documents evidencing that on-site sales of food and beverage to the public comprise at least 33% of gross receipts for 2019. For businesses that opened in 2020, the applicant's original business model, or I'm sorry, your business plan, should have contemplated at least 33% of gross receipts in on-site sales of food and beverage to the public. When I said operating plan, I meant business plan. Next one. Again, how do you get help? That number we gave you earlier, 844-279-8898. You can also go to sba.gov/local-assistance. And also, there's going to be help in multiple languages. Right now, the site is going to be in English and Spanish, but they have like 30 other languages that they can assist you in. And those languages are listed on the website I'm going to be giving you here in a second. Now, best practices. Applications with incomplete documentation will be rejected. The review process will restart when complete documentation is provided. Delays could jeopardize the applicants receiving the award. You have to leverage your resources. While not required, the use of CPAs and other accounting professionals may help ensure a complete and well-documented application. We're not saying you have to use a CPA or accounting professional. It's the best practice. It's going to help, we believe, will help you complete and provide us complete, and well-documented application. Application corrections. The SBA is not able to make corrections on behalf of an applicant. Applicants who require corrections will need to contact the call center hotline. That same number, 844-279-8898. Applicants who still intend to apply for a PPP, the RRF applicants are advised to complete their PPP application in advance of the RRF application. However, right now PPP runs are now exhausted, so it's probably going to be good to apply for a PPP at this point. Next one. When can you apply? But there was a pilot period that's already over. What they basically did there, they took about 1,000 randomly selected PPP borrowers and had them go through the process of applying. They did not receive funds, but they went through the process. And we're finding out that the actual application process takes anywhere from 25 minutes to 30 minutes. Now we're in the priority period now. The application just opened up on Monday. And for the first 21 days, SBA will accept applicants from everyone. However, only those applicants from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during this period. So everyone can apply, but not everyone's going to receive money at first. Only those businesses that are owned by women, veterans, and socially and economically disadvantaged applicants are going to be funded. Day 22, all eligible applications will be processed and funded until the program funds are exhausted. What are priority groups? And that's a big question everyone has. A priority group is a small business concern that is at least 51% owned and managed within the daily business operations of the applicant are controlled by one or more individuals who are women, veterans, socially and economically disadvantaged. The applicants must self-certify on the application that they meet eligibility requirements. For example, an applicant has 5 owners who each own 20% of the applicant, and the applicant is actively actually the business. 2 owners are veterans. 1 owner is socially and economically disadvantaged individual. SBA will consider this applicant to meet the requirement that at least 51% of the applicant is owned by a priority group. So you can combine. Next one. Okay, socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias causing their identity as a member of the group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. They're presumed to be socially disadvantaged. Economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. What we found is that, again, we talked about the Black Americans, Hispanic Americans, Natives American, Alaska Natives, and Native Hawaiians, Asian Pacific, and subcontinent Asian American. They're presumed socially disadvantaged. Now, we are designating the LGBT groups and disabled folks as socially disadvantaged, but they will also have to qualify as economically disadvantaged as well. Okay. Now, this is important. Entity reorganization for purpose of qualification for the priority period will result in automatic disqualification of the award. So basically, wherever you have been, stay where you are. You don't want to reorganize your business to say that you're a priority group, because we're going to flag that, and you'll be disqualified. Okay. Set asides. This is of the $28.6 billion, $5 billion is set aside for applicants with 2019 gross receipts of not more than $500,000. An additional $4 billion is set aside for applicants with 2019 gross receipts from $500,001 to $1.5 million. And an additional $500 million is set aside for applicants with 2019 gross receipts of not more than $50,000. SBA reserves the right to reallocate these funds at the discretion of the administrator. Next one. Predictable process. There are clear eligibility guidelines, a straightforward application portal, and standard reporting templates. You also receive support from the Recovery Office. There's ongoing question and answer support. Email Canvas covidsupport@canvas.gov for detailed questions. You see future webinars regarding the grant process. And also you can go to the SBA's website at sba.gov SBA.gov, and when you get to that page, can we bring that up, Mike, if I can check the SBA page? It's actually on the website. Well, if we don't get to it, basically you can go to the SBA.gov page. There you go. When you get there, you'll see a flashing sign that says COVID-19 relief options. Click on that. It'll bring you to this page, and you'll see the Restaurant Revitalization Fund. Click on that. And on that, you'll see the program details, supplemental documents, and everything we discussed is on this particular page. If you go to supplemental documents and click on it, you click the one that's in RRF knowledge-based support documentation. All that has every question you may have is going to be included in this. So there's also question and answers, FAQs on there. So be sure and check those out. They'll help you, along with the Kansas COVID relief folks, help you help answer any questions that you may have.
Okay. Michael, the sound is a little bit muffled, and I don't know what I don't know exactly how you're dialed in, but the sound is just a little bit muffled there. But anyway, wanted to pause here. Micah, I think we got to most of the questions in the chat. If there are others, we would welcome any questions at this time.
Perfect. When we do have a few questions that I'm gonna, even if we've covered a few of them, just want to make sure that we recover some of that content. Our first question comes from Grant, who asks, are property taxes included in eligible expenses?
Yeah, I saw that question, and what I'd like to do is submit that. I didn't see it noted in any of those eligible expenses that we had a little more detail to, but understanding that's a normal business operating expense. What I want to do is submit that up, and we'll get an answer if it hasn't already been answered someplace on the website. We'll find out.
Perfect. Thank you, Wayne. Our next question comes from Patricia Miller, who is the owner of a bed and breakfast, who is interested in learning more about if a bed and breakfast or other hotel that serves breakfast or other meals is eligible.
Michael, it looks like you're muted right now.
Can you guys hear me now?
Yes.
Okay. That question has come up, and we'll send that up again. But that is in the question and answer period, because that has been asked. And there's a specific NAIC code for an inn. You want to see if the bed and breakfast meets the NAIC code, because some bed and breakfast would probably apply, would probably qualify, some may not. So we'll have to, that's going to be an individual case. So we'll be sure and send that question on up regarding your particular situation. We'll send it up as well.
The one thing I would submit there, I've been listening to, in preparation for our call today, I listened to a few presentations. And one of the things specific that kind of pertains to this is, in this fund, we really intend to allow those establishments that have 33% of their dining, if you will, related to dining, related to those total revenues. And so when you think about this bed and breakfast model that you have, if you can clearly show that the food and beverage part of your bed and breakfast accounts for 33% or more of the total revenues, I think you're going to be in good shape. But we'll also submit the question up, as Michael's noted, but just remember that 33% threshold of the total revenues is a big part of what the restaurant or the food service entity needs to generate.
Perfect. Thank you, Michael, or Wayne rather. Our next question is, Nathan wanted to clarify what month's bank statements are required.
You'll need 3 months if you, let's say you apply here in May. You'll need your April, your March, and your February bank statement, 3 months prior to your application. Oh, one quick question, I think Wayne will back on this. Be sure you have a business account and the money can be deposited in. If you apply with your personal account, that's going to be a red flag. So be sure you have a business bank account that we can deposit.
I want to go back to something also. It's very important for those of you that are using third-party point of sale providers. So Michael noted those that were using Square or Toast. What I learned overnight is that Square and Toast, those third parties, you can actually apply for the Restaurant Revitalization Fund through those third parties. Aloha and what was the other one? Aloha and Clover. They can provide you the supporting reports to that you would then use to apply online here with the SBA. But Square and Toast, you can actually apply directly. If you're using Square, you can apply through that third-party provider.
Perfect. Thank you, Wayne. We have another question from Angela who asks, if you're expanding funds for renovations now to reopen, then are these funds eligible for the grant?
You got to be careful with these funds. It's really specific. They can't be used for expansion, right? And so that construction would be ineligible. Now, if it's used for modifications of your existing space, what we've learned is that would fall under maintenance fees. As an example, you had to make some modifications due to the local ordinance or local orders, perhaps in your county or city. Then I believe that would be eligible, but it's really, expansion is going to be a red flag.
Remember, you have till 2023 to use these funds. Example, what Wayne's talked about, there's a restaurant that they took out the booths and they bought chairs and tables because that way it could space people easier. The booths weren't allowed to do that. That would probably pass. Or someone that that wants to buy a van for their food truck business. If they bought a van or a new vehicle to replace one that's broken down, that would be eligible. But if you buy one because you want to expand, that would not be eligible. So everyone's gonna be kind of a case-by-case basis. And like Wayne said, be careful about expansion. The only thing they're really gonna prove is that it's because of a local ordinance, or you want to do some outdoor construction or outdoor seating.
Perfect. Thank you, Michael and Wayne. Our next question comes from Judy, who wanted to know from a clarification standpoint, when is the soonest following the application that they can expect money to flow from the SBA?
It'll probably get there when it gets there. I know they're trying to get within, what do you think, about a month or so, Wayne?
Yeah, I think it's going to be, I would allow certainly a couple of weeks. Right now, remember, you've got this window where the first 21 days, the applications that are coming from the priority groups, women, veterans, and socially disadvantaged or economically disadvantaged businesses, which are typically minority-owned firms. So those applications are being processed first in the first 21 days. Then the broader community of restaurant and food companies will be processed afterwards. So depending on where you fall in those two groups, then I would say the things that are going to expedite the applications, if you're using a third party, again, one of those, Square, Toast, Aloha, one of those, that information is going to help to expedite your application. There's already been agreements in place with the SBA behind the scenes with those third parties, and so that's going to help to streamline, the review of your application. And then Michael covered some complexities in the calculations that will lead to a longer review. So if you're in that one of those groups that opened maybe in 2020 late or in 2021, that could lead to more time in the review of your application versus someone that had their restaurant in operation back in 2019.
Thank you, Wayne. Our next question comes from Jerry, who is the owner of 2 small businesses in Kansas. Jerry specifically applied for PPP based on the 2 individual businesses being combined together as a result of the fact that they have only 1 federal ID number. And they're looking for any guidance you might have on how they can apply to this program, given the limitations of PPP and the fact that one of the 2 businesses that they applied for is not a restaurant.
I think you would use one that's just a restaurant only and use that as far as the fund. You can mention the other, I mean, you will probably have to acknowledge if there's a business, but say this is the restaurant and use those particular funds from that restaurant.
There was, so I listened to, last night, again, I listened to our guy, Patrick Kelly, who is our associate administrator over the Office of Capital Access. And he kind of went through a similar question. And basically, this is the guidance that he left. Use, if you applied and received PPP funds, then you need to apply under the same EINs and everything that you utilize for PPP. You need to follow that same, the same approach that you use for your PPP money and receive PPP money. That needs to be reflected in your application here for RRF.
Thank you, Wayne and Michael. We have time for one more question from Jose, who asks, I have to pay a percentage of the landlord insurance. Would that be an eligible expense?
You pay a percentage of the landlord insurance. Is that right, Micah?
Yes.
Okay. Go ahead, Michael. I'm sorry.
I didn't hear the question. I'm sorry. I didn't understand the question. Sorry.
Jose stated that they pay a percentage of landlord insurance and wanted to know if payments for that landlord insurance would be an eligible expense.
I believe it would be. Yeah, I believe it would be. You just need to expense that out. You need to make sure that that's reflected in the application and then broken out in those subsequent documents where you're going to specify your expenses. You need to really expense that out.
If you have
Michael, you're muted.
Yeah, and on that one again, if you have be sure that you have if you have a CPA or an accountant that verifies that expense, that's going to make your application go through the process a lot quicker. You don't want to red flag things if you can.
Perfect. Thank you, Michael and Wayne. One other question that I want to sneak in that is very much related to that. We had a few different individuals reach out saying that they've had individuals reach out by phone offering to help them apply for the grant, letting them know that they'll charge something around 4% of the total amount their business receives for doing the paperwork for them. The assumption from most of these questions is that they should do the paperwork themselves, but they wanted to know if we would recommend a preparer.
I think you saw Wayne and I both shaking our heads. You should not have someone, the SBA is not going to pay for that. And you should be careful about using someone who wants to charge you for that. Like we discussed, you have a lot of help you have the Kansas Department of Recovery here. You have the SBA website. Use those resources if you can. Use your accountant, use your accounting person. I know it may be an expense, but it's like an investment as well. I would not, I'm going to charge you 4%. Whatever,
Please don't pay someone to do this application for you. You've got other SBA resource partners that can help. The Kansas Small Business Development Center, SCORE. Please don't do that. And even in this case, our SBA staff, although our responses are going to be slow, you've got our two district offices here. But remember, you also have the customer service line that Michael pointed out. So the resources here are just abundant. Don't pay monies that you shouldn't have to pay. There's a lot of good information here, and I think the application is really straightforward. You know, if you, we've already talked to a few business owners that have already now, you know, walked through it. They've submitted their application. Yeah, and if you've got something that's really complicated, then you should be working with your CPA or financial advisor, you know, through that.
Yeah, the thing that scared that question that really bothered me, they would charge you 4% of whatever you receive. That this isn't a personal injury case, so you need to use a qualified accountant or a CPA, or use the help that's available for you.
So, well, it is 10 a.m. Central Time, so I want to make sure that I honor everyone's time. Thank you all for taking the time to be here with us today. It's really been a pleasure helping spread this information, but also learning more about some of the concerns and questions that exist for entities across the great state of Kansas. Thank you all for all you're doing and all you're doing to help continue, as Ryan said at the start, to build on the amazing culture that we have in the great state of Kansas. Please do let us know if there are any ways that we can support. We will be sending out via the same channels that you were initially informed about this webinar, the individual recording, as well as the materials themselves, which will be posted on the Kansas Recovery Office's website. Please do let us know if you have any questions by contacting us at kansascovidsupport@ks.gov or by reaching out to the SBA. Thank you all so much.
Thank you.
Thank you.
Thanks.